Hello and welcome to Property Box News. I'm Simon Evison and welcome to 2019. It's great to be back. So what will happen in the coming year? It's certainly going to be interesting, all things considered. One thing I can tell you about is on this channel, we've got a new monthly programme coming up later this year called Property Box Den. And this will be a new show where I'll be hosting a special guest and we'll be taking a closer look at the most relevant stories to us as property investors. Back to what may happen this year in property investing. A common theme I'm hearing is there are probably going to be plenty of deals to be had, mostly because of the wait and see attitude that seems to be the norm right now with both sellers and buyers alike. There are less buyers about, but there will still be people who simply have to sell. So it could be that with clever negotiation, that cheeky offer might be accepted more readily. Also, once Brexit is resolved, come what may, excuse the pun, there is likely to be lots of activity with lots of property coming to the market, which will mean the possibility of oversupply, and therefore vendors might have to accept a little less than they'd originally hoped for. And I'm going to look at house prices in a bit more detail later on. Now, with deposits we can take from tenants, things are about to change. There's going to be a cap likely to be set at a maximum of 5 weeks' rent, meaning we don't get to charge what we really need to cover damages or outstanding rent when a tenancy ends. As we filmed this, the House of Lords was about to start the third and final reading of the tenant fees bill, and it's the final opportunity for any further amendments to be made. After this, the bill returns briefly to the House of Commons before it is made law. As yet, there's no indication of the implementation date. Now, as an alternative to deposits, there are insurance-based schemes, and they are becoming a major part of renting, according to Zero Deposits, an FCA-backed scheme that vastly reduces the upfront cost to tenants and guarantees payment to landlords where damage has been caused. So it'll be interesting to see how many more similar products are created in the coming months, and there are already some on the market. There are, however, plenty of sceptical views on insurance schemes, with many landlords saying that they'd prefer to have a physical deposit. And we'll see how all of this pans out, of course, in the coming months. Now, with rents, we can't ignore universal credit. The much maligned scheme that the government has slowly been introducing hit the headlines again recently with the announcement that the next phase of rollout was to be vastly reduced. It was supposed to be something like 3 million, but it was cut down to 10,000 claimants. It's also been announced that the housing benefit portion is to be paid directly to the landlord via an online payment system. Now, this news has been warmly received across the sector because the biggest issue with universal credit is that since its rollout began, claimants were more likely to go into arrears. And RLA research has shown in a recent survey of over 2,200 landlords, 61% with tenants on universal credit are in arrears, and that's up 27%. So hopefully this will reduce the number of tenants falling into arrears under this system. We'll see. So coming back to house prices then, according to RICS, house prices in the coming year will stagnate. The surveyor's body says a number of factors, including Brexit and affordability, will impact the growth of property prices. The Institute says the number of sales will fall back by 5% to 1.15 million, which is below the 2018 figure and way below the 2006 high of 1.7 million. Nationally, they expect prices to be neutral and fall slightly in London and the South East, saying particularly London prices have reached their maximum of affordability at the present time. As for investors, well, we don't need to sell if we don't have to, especially when we're making good cash flow. Add to this the encouraging news that RICS sees rents continuing to rise this year due to a sustained drop in the availability of space to rent. It said its index of landlord instructions coming to the market has been in negative territory for 10 successive quarters, which it describes as the longest stretch of declining in supply in the rental market since the series began in 1999. Further to this, HomeLet reported a 1.5% rise in average rents in the 12 months to December 2018 and expects similar rises throughout 2019. Martin Totti, chief executive at HomeLet, said, "Positively for both tenants and landlords this past year, we've seen stability in UK rental price growth, with increases remaining broadly in line with the rate of consumer inflation." He went on to say for landlords, there remains a sustained demand for property, with the private rental sector continuing to provide the market with both flexible and long-term housing options. He further stated private residential landlords will continue to play a key role in the wider UK housing market, which is a really positive thought. But I want to know what your thoughts are and your forecast for 2019. So drop us a line below, we'd love to hear your comments. And finally, Rightmove announced it enjoyed over 25 million pages viewed on Boxing Day. So what does this say about us as a nation? We're either obsessed with property transactions are likely to be higher this year, or we were just fed up with Christmas telly and our families. Who knows? It does say to me that perhaps we are indeed obsessed with property, and this industry will continue to be a busy and exciting one over the coming 12 months. Have a great and productive year investing. Thanks for tuning in, and I'll see you next time. Goodbye. I'm a space invader. Okay.